Hello, hello, good people. I'm Chris. Thanks for tuning in where faith, family, and finances come together. Hope everyone is doing outstanding, enjoying the closeout of their Christmas weekend. Hope you're doing well today. I hope you're at peace, and I hope you've taken a moment to slow down, right? So, on today, I want to do my normal Sunday recap. Want to encourage everyone to calm, be prepared, and be aligned. Okay, so because today isn't about predictions, today is about positioning, right? I harp on positioning from time to time, the size of your positioning, whatever, what have you. I always say, that's a important thing, right? Okay, so the markets are quiet, the year is closing, emotions are high, and moments like this are where wisdom matters most. So let's set the tone a little bit. Let me say this clearly from the start. This is not a hype video. This is not what's about to explode message. And this is not a call to action. This is a preparation conversation. Be prepared. Don't trade with your hearts. Trade with the charts or trade with wisdom, right? Because when you understand what seasons you are in, you stop reacting to every headline and start moving with clarity. And that's what we want to try to get you to do, to operate in clarity, right? Peace isn't passive. Peace is informed. Let's do a quick stock market overview. As of today, the stock market is closed. We all know it's Sunday, right? And we're still in a holiday stretch. That means the trading volume has been lighter. Institutional positioning for the year is largely done, right? Recent price movement has been calm, not chaotic. And calm markets can be uncomfortable for people who are used to constant movement. And I can say I, for one, am used to being in constant movement. Not talking about the market, me personally, right? So that's just something we have to work on once we've been made aware of it, right? Some get bored and overtrade. Some get anxious and assume something is wrong. Neither response is wise. And here we like to talk about walking in wisdom, right? So, strong markets don't demand constant action, they reward discipline. Sometimes the most disciplined move is no moves at all. My good friend Larry Jones like to say that sometimes. He says sometimes you just need to sit still and don't do nothing at all. Chris Sane like to say that from time to time. Sometimes it's time to stand still. You don't need to make a trade every day, all the time, right? Stocks with Josh, Stock Mo, Keenan, they all say that from time to time, right? But that's something we have to learn for our own self. That's a discipline we have to learn for ourselves. And then once we learn it, hopefully we put it into practice, right? All right. Let me touch base on the Santa Claus rally, right? There's one seasonal concept I want to cover on today, and I want to be honest with you. It's something that's been on my mind, and I didn't address it. So now I feel like I'm missing. If I don't address it now, I'd feel like I was missing an important moment of preparation. Keyword, moment of preparation. And here's why. So let's talk about it plainly. What is the Santa Claus rally? The Santa Claus rally refers to a historic tendency for the stock market to perform well during the final week of December and the first few trading days of January, right? I like the way Stocks with Josh said best. He said it's normally the last 3 days of December, which we are entering in probably tomorrow, right? Because the last 3 working days. And then Josh says it's the first 2 trading days of the new year. So we know the market is closed on 1 January, so that would give us the second is Friday, and then Monday would be the second trading day of the year. So, none of that is written in stone. That's why it is a historical tendency. It's not always promised. And I can say we have been, slowly melting up, right? I just say you have to take the win when you can take it, and when we don't have it, we just have to be content that we're moving in wisdom, right? Building our financial wealth. So that's it. It's not magic, it's not guaranteed, and it's not something you need to act on. This is something to be aware of, not something you need to act on. So I've done my part, I've made you aware of it. Why it tends to happen. This tendency exists because trading volume is lighter, large institutional repositioning is largely complete, sentiment improves heading into a new year, right? And there's typically less negative news circulating. Hope alone doesn't move markets, but positioning combined with sentiment can. So hope alone doesn't move markets, right? You can't wish the markets to shoot up because you have some financial obligations you want to meet. That's why it's important that you only invest money that you're not going to need for a year or two, because you have to give the money an opportunity to go to work, right? So most of us on our regular jobs, we get paid every week or every 2 weeks. So it doesn't matter when you need your money, you're going to get paid when payday is due, right? But if you don't put your work in, then you won't even get that, right? So it's the same way in the market, right? That's why it said, trying to time the market is futile. Time in the market beats trying to time the market all the time. That's operating in wisdom, being consistent in the market on a regular basis, dollar cost averaging. So, important perspective. This part matters. The Santa Claus rally does not happen every year, does not guarantee gains, does not predict what January will do. When it doesn't happen, January can occasionally be more volatile. So, hear me clearly. This is context, not a signal. Information, not instruction. Why this should matter for you? The reason we talk about things like this isn't to chase returns. It's to remove emotions. So if markets drift higher, you don't get greedy. It's been said, hogs get fed. No, I'm sorry, I got that wrong. Bears get fed. Bulls get fed. Hogs get slaughtered. So when it's a bull market and you're a bull, okay, you're making your money. When it's a bear market and you're a bear, okay, you're making money. But regardless of what market it is in, when you become a hog, overly greedy, you get slaughtered. What do I mean by that? You become a bag holder, because when you get overly greedy, you find that instead of being up, you find yourself at a loss. And no one's fault but yours by operating out of emotions and not operating out of your knowledge, right? So I'm not trying to get on anyone. Just trying to say you got to be prepared. We don't chase returns. Okay. It's to remove emotions. So if markets drift higher, you don't get greedy. If markets pull back, you don't panic. Preparation removes pressure. Again, let me say that again. Preparations, being ready, being prepared, removes the pressure off of you, right? Knowing the seasons keep you from misreading the weather. Long-term investors don't react to calendar effects. They recognize them and remain disciplined. Continuing to do what you know to do. Dollar cost average. Continue to build your position. Peace isn't the absence of movement. Peace is the presence of clarity. And that's where we want to strive to be. We want to strive to be clarity. Now, the crypto market check. A quick word on crypto. Crypto trades 24/7. But weekends often bring what? Weekend often bring lighter liquidity. Weekends bring more emotional price action, and weekends bring less conviction. So we don't want to get caught up in that. Right now, crypto is consolidating, not collapsing. Let me say that again. Somebody need to hear that. Crypto is consolidating, not collapsing. Volatility without volume is noise, not a signal. If your plan changes every weekend, then your plan isn't strong enough. Something we might want to consider. And that's not criticism. It's an invitation to refine. All right. Let's look at alignment and financial peace. Let me ground this here. Peace is still the first dividend. If the market being closed makes you anxious, that's information. If quiet weeks make you uncomfortable, that's something worth exploring. Because God doesn't rush, and neither should we. Faith teaches us patience, stewardship teaches us restraint, and financial peace isn't about avoiding markets. It's about engaging them without anxiety. Anxiety is not a good thing, right? Okay, let's look at this from a faith-centered perspective. The year ending isn't a verdict, it's a checkpoint. You don't measure success by one trade. You don't measure success by one missed opportunity, nor by one moment. You measure it. You measure it consistency, you measure it growth, and you measure it with alignment. Clarity matters more than certainty. Nothing is written in stone. Nobody has a crystal ball. We can't guarantee you what the market is going to do today, what the market is going to do this hour. Even when you're a chart specialist and you know it's supposed to be continuing green, but something happens. Something happens in the economy. Something happens in the political arena. Something happens with a CEO of a company. Whatever the case may be, something happens and the market reverses. Things like this happen, right? That's why you have to have patience. You need to make pivots if you need to, and continue on. With your game plan, with your strategy, right? So if this helped you slow down and think clearly today, share it with someone who needs that peace. If you're new here, welcome. We move calmly here. And remember, slow down, stay aligned, walk in wisdom. If this content helped you in any way, please like, subscribe, and share it with someone who can use it. Take care and be blessed continually, my friend.